So 90% of the price action of Bitcoin is explained by this one macro factor, liquidity. So we've seen global liquidity increasing. Bizarrely, this was the banana zone phase one correction, start of phase two. We think it starts doing more of this now, which is the acceleration phase. It won't do this because obviously we don't have a pandemic. So we're looking for liquidity to rise to something like 10 to 15% a year, stay there for a while, and that will start really driving assets. Of all the risk assets, the one that's most susceptible to liquidity is crypto. So crypto got that, which has been this choppy, it went up, alts have been outperforming, then they came back down again, and it's been just a bit sloppy. So banana zone phase two started here, and we're going to get into the acceleration zone of that comes ahead.
A super acceleration is coming for Bitcoin and crypto, and many are anticipating the bullish momentum as we continue to see more all-time highs. As this momentum is building, the institutions are quietly positioning themselves, and Raoul says everything is about to change. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul says that he's remaining bullish on digital assets. The former Goldman Sachs executive gives a portfolio update. He says the next phase of the crypto cycle is critical, and why in 2025 we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul predicts that crypto is on track to be a $10 trillion digital asset class. Powell says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Let's get right into the latest interview with Raoul as he gives his market prediction for the days and weeks ahead. Drop your comments down below and subscribe if you enjoy the content we do here.
We've said leg one of the banana zone, that was August. The banana zone phase one. We then said the liquidity was coming out, and this would be the phase one correction. In April, we very publicly did a flash update and said, banana zone phase two is starting. And we're still in banana zone phase two. In fact, banana zone phase two is going to be so big. This is SUI, right? So since the start of that, we're still up 670% on the start of that. You need to have quality assets. So this is others excluding the top 10. We're still miles away from breaking out. And that's because you've got a bad asset allocation. This one, that did fine. Solana, Ethereum, Bitcoin, rock stars. It's all there. So banana zone phase two started here, and we're going to get into the acceleration zone of that comes ahead. We'll come into that. But you guys have got to learn patience. But no, you think, oh, no, I need that 100x. I've got to have the 100x. I'm never going to do this. And you actually, what you get is 100% loss, and everything else has gone up 20x. And you're poor. So let's not be poor. Here's total global liquidity. We're pretty much at all-time highs as liquidity is growing at 8% a year. That is the liquidity we think of because we're crypto people or technology investors. We think of this as great. For everybody else, including for your income, this is debasement of currency, and it's totally screwing you over. Your cash savings, all of that, it's all based around this. If you're not beating this 8% annualized growth rate of global liquidity plus 3% inflation, that's 11%, your future self is getting poorer. This is the game we're in. This is why we're taking absurd, ridiculous, irresponsibly long risks in technology and crypto and teach you how to do it. And then all you can reply is when banana. Okay, why does it matter? It is what Bitcoin is. It is what NASDAQ is. It is what is driving markets. In addition, there are two different scales here. Why? Because Bitcoin is exponential based on Metcalfe's law, which is a network adoption model. So over time, you get the outperformance of the network plus the debasement, which is why it's la land in terms of performance. Bitcoin, Ethereum, all the big tokens. I use Bitcoin because it's easiest. It's got the longest track record to show people within. But Solana, SUI, you choose your thing. It's all based around the same thing. Why it matters, it has a 90% correlation. So 90% of the price action of Bitcoin is explained by this one macro factor, liquidity. Oh, and by the way, 96% of the NASDAQ. So what we have, and I keep trying to explain this to people, I'll explain to them tomorrow in more depth. We have a single macro variable that explains 90% of the price action of every major asset. That makes it the easiest macro risk-taking opportunity of all time, because everything else is noise. Everything is just wiggles. You see the wiggles. These are wiggles. It's just noise. Wiggles. It's all noise, because this is the trend. You just need to understand liquidity, and then you understand the directionality. And if you're caring about the next 3 weeks, the next day, the next month, you are doing this wrong. Global liquidity, what's it doing? Well, global liquidity year on year is not at all-time high. So we're not at the acceleration phase. We've seen global liquidity increasing. It's just ticking down recently. Oh, guess what? The markets have ticked down a bit. Bizarrely, this was the banana zone phase one correction, start of phase two. Here's the 12-week lead. Since July 16th, 2025, we've seen this weird underperformance. And it was like, it's broken. People start forgetting about it. We don't forget. You see, what has happened in the meantime is the Treasury General Account, that is the Fed, the Treasury, have been issuing bonds to top up their general account, which is taking cash out of the system. So they've withdrawn about 500 billion since July the 16th. That has hit risk assets somewhat. And of all the risk assets, the one that's most susceptible to liquidity is crypto.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
So crypto got that, which has been this choppy, it went up, alts have been outperforming, then they came back down again, and it's been just a bit sloppy. Nothing more than that. There's been nothing really adverse going on, just a bit sloppy. Top of the range for ETH, top of the range for Sol, tried to break out, came back down. Fine. But generally it's because they're sloppy because liquidity has been taken out very fast. The liquidity withdrawal stops about here. We're at the point where we don't need to withdraw any more liquidity and the Treasury General Account is topped up. Okay, so that negative thing has gone probably today, tomorrow, this week, next week, whatever. It's gone. And we start to see that liquidity will play catch up. Does it catch up to this chart? I don't know, but it always has done in the past. And I'll come on to the past in a sec. Okay, then we go to the NASDAQ. It's actually done really well in recent times, following this beautifully, because 97% of NASDAQ's performance is explained by this. But look at this in the past. This is all based on flows. So NASDAQ is getting consistent flows based on this technology bid that's going on. And it's sucking in capital from foreign investors, etc. And Bitcoin just has been sloppy because it's had less of the capital that was available. So it's the marginal capital. As the marginal capital comes back, Bitcoin outperforms. And I'll show you that. So here is the chart of Bitcoin versus NASDAQ since 2022. So Bitcoin's been outperforming NASDAQ. That's its job. That's what it does. This is why we own it. And it does these kind of nice corrective patterns up, corrective pattern up. And what we've done is we're back near this old 2 standard deviation favorite place of ours, where generally Bitcoin outperforms. Now, I've noticed many of you, and I noticed on X, are all like punting tech stocks and saying, well, crypto, it's boring. It's changed. The market's changed. They're all different now. Short periods of time, so that happens. And what will happen is the more of you, I even heard from good hedge fund in crypto. They're like, yeah, we're thinking we're just going to trade more stocks now because the crypto market's not the same. So what they're suffering from is this. We've got the 9-13-9 pattern. So that starts to suggest that Bitcoin will outperform technology. Maybe technology corrects a bit, Bitcoin does okay, and then Bitcoin starts outperforming. And I would suggest that alts will outperform. Another interesting chart for you, not related to the liquidity flow, but located to when people start getting fixated on a particular type of market. S&P in the 90s into 2001 versus S&P today has been extraordinarily similar. And that's this technology narrative, the AI narrative, and how it's taken hold there. So just an interesting chart. Whether it holds forever, I actually doubt it. I think this probably comes up, then comes down. I think this whole cycle lasts a bit longer. So why is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the everything code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other real other time? It's because, and I only just found this out redoing the work on the everything code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced.
Powell stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building, and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out.